For US investors, crypto tax efficiency is no longer optional. It's a core part of a forward-looking portfolio management. In this video, I'll walk through the most effective and fully compliant tax optimization strategies US investors can use to keep more of their crypto profits. If you're an investor who already understands crypto's potential, this is about making sure the IRS doesn't become your largest silent partner. I'm Marcus Lutz, and I've been investing in crypto for over 5 years, consistently outperforming the market since then. Now I'm helping others to do the same through strategic crypto investing. I'm not a CPA or a certified tax advisor, and this content is for informational purposes only. Investors should consult a qualified tax professional and/or use appropriate tax software for tax reporting and compliance. Nevertheless, if you like this video, please subscribe and like this video if you find this content valuable. With that said, let's dive into the video. The simplest and most powerful tool in your crypto tax optimization arsenal is patience. The IRS sees crypto as property. It rewards those who hold the assets long term and not just for a short term. So when you hold crypto for less than 1 year and then sell it for profit, that's a short-term capital gain. It gets taxed at your ordinary income rate, which can be as high as 37%. But if you hold the same crypto for more than a year before selling, it becomes a long-term capital gain. And that tax rates here are way lower. They can reach from 0% up to 20% maximum, depending on your total income. So for high earners, the savings can be substantial. A single filer with income between 48 grand and 530,000 per year pays only a 15% long-term rate. That means for a $50,000 capital gain in crypto, you can save more than $11,000 in taxes if you just hold crypto for more than a year rather than less than a year. But this takes discipline. You have to place orders deliberately and resist trading up and down in market conditions. But by simply holding on, you signal to the IRS that you're an investor and not a trader, which gets a much better tax treatment. Now for a strategy that feels a bit more like a cheat code, it's called tax loss harvesting. Here's how it works. You sell a crypto that has gone down in value to realize a capital loss. You then use that capital loss to cancel out a capital gain from different investment or just a different crypto coin. This basically wipes out your complete capital gains tax. So for example, if you have $10,000 in profit from Bitcoin that you're going to owe tax on, but you also have another coin where you're down $10,000, simply by selling the other coin, you harvest a loss of $10,000. And this cancels out your gain of $10,000 you have with Bitcoin. So your net capital gain is zero and your tax bill as well. In addition, if you have more losses than gains, you can actually use up to $3,000 of the excess to reduce taxes on your regular income from your job. And this is exactly where the wash rule becomes relevant. Because you see, for stocks, if you sell them at a loss and buy them back within 30 days, the IRS restricts the loss for tax purposes. But as it stands, the IRS classifies crypto as property, not a security. So the wash sale rule still applies for the 2025 tax season. And this is a huge advantage. You can sell a coin to harvest the tax loss and then immediately buy it back, keeping your position in the asset you believe in long term, all while banking the tax savings. Now, keep in mind that lawmakers are actively trying to close this little loophole, so this is definitely a use it while you can situation. The deadline to do this for the 2025 tax year is December 31st, so hurry up. And with all of this, I understand what you might be thinking. Tracking all of this, purchase dates, cost basis, transaction, multiple wallets, exchanges, this can feel completely overwhelming. And that's because it also is. And that's why I can only recommend using crypto tax software. This is no longer optional, it's essential for a sophisticated crypto investor. Platforms like Coinly, CoinLedgers, and others are specifically designed to handle all of these complexities. They integrate seamlessly with your wallets and exchanges, automatically tracking transactions and identifying opportunities to even optimize your tax position. And these tools can also generate the necessary IRS forms that you need to file. Plans start at just $99 and the links are below. And no, they didn't sponsor this video, but I'm still very much recommending to use them. And the last strategy, and arguably most important, are tax advantaged accounts, with one of the most powerful and accessible ones being a crypto IRA. so an individual retirement account. A crypto IRA allows you to buy, sell, and trade cryptocurrencies within a retirement account. And basically there are two types here. We have the traditional and the Roth IRA. And with the traditional IRA, contributions may be tax deductible, so pre-tax, and investments grow tax deferred, meaning you only pay taxes when you actually withdraw the funds in retirement. On the other hand, with the Roth IRA, contributions are made with after-tax dollars, but all growth, including gains from every crypto trade, can be completely tax-free withdrawn in retirement. But of course, there are always rules, and contributions are generally made in cash rather than existing cryptocurrency. Furthermore, there are annual contribution limits, and Roth eligibility is subject to income restrictions. What matters here for me is that you as an investor carefully weigh the costs of such accounts, the setup fees, the management fees every year, with the potential benefits that you get in less taxes. And then you have to make the decision for yourself if it's actually worth it or not, because this will always depend on your individual situation. With that said, let's recap. So the 2025 tax season is starting soon, but now you're actually prepared with the 4 pillars of crypto tax optimization. And these are: prioritize long-term holds over a year to slash your capital gains rate. Second, actively use tax loss harvesting and strategies. Third, use crypto tax software like Coinly or CoinLedger or any other software that you feel like fits your needs to automate everything and actually file them correctly. And number 4, explore tax-advantaged accounts to let your crypto grow completely tax-free over the coming decades. And I understand navigating the entire crypto market can feel overwhelming, but it doesn't have to be. By applying the right strategies, you can invest with confidence and structure your portfolio efficiently and position yourself for long-term growth. So if you're looking for a personalized, custom crypto investing plan with a proven capital allocation framework for your portfolio, then please click the link down beneath this video and schedule a call with me to discuss your options in the crypto market. Thanks for watching. If you found this guide valuable, do me a favor, hit the like and subscribe button and send this video to one friend that needs to see this. Thank you and see you in the next one. Cheers.